Back to energy infrastructure. Here's Ray in Red Deer, Alberta. Hi, Ray.
Afternoon, gentlemen. Appreciate your show. Glad to see you got IPL, which I've had since a year ago, October. My number one question is on Alta Gas Lake. I had set your pullback or your stop loss in, and it went right to my stop loss, which was 10% below the price in October, and it jumped right back up. And I'm wondering why, number one, and my question's actually on Keyera. Thank you.
Okay.
I'll hang up and listen.
So on Keyera and on this whole group, just as an aside, one of the things you want to watch when you go through a correction is what is it that holds on the longest? You know, if a correction gets deep enough, ultimately they come back one by one and they get even the strong stocks because investors start to look for something they can sell if they need to, and so the strong ones start to get hit at the end. If you look at the energy infrastructure companies, you look at a Keyera, for instance, it was within about 3% of its high until the last 3 days of the decline. And then it got whacked for a couple of days, and within 3 days it's back to basically where it had been before it broke lower. There were a lot of leveraged investors in the U.S. buying these for yield as on a leveraged basis, and I think a lot of them got shaken out. I have to tell you, we look for what is it that holds up the longest, and then what is it that rallies the quickest off the bottom, and most of these companies fit in that camp. I said earlier, stocks pull back naturally. What you want to avoid is them reversing direction. And if you looked at a point and figure price chart of Keyera, you would see that it had a very steady, over the last 4 years, steady series of higher highs and higher lows. This pullback recently certainly pulled back on the chart, did not reverse lower. So we own Keyera. We think it's a great company in the space. As I mentioned, we've reduced our exposure to energy infrastructure a small amount because it's not performing relatively as well as it has. But I see no reason to sell this stock. We're going to get great dividend growth going forward.
Back into U.S. retail now. Here's Don. He's in Toronto. Good evening.
Yes, good evening, Mark and David. I was thinking about getting into one of the drugstore companies, either Walgreens or CVS.
Okay.
I wondered what David thought about it and which one would he recommend?
Okay, thanks, Don. That was mercifully short. I think may have been in Afghanistan, but anyway, go ahead.
Don, if I have to pick one of the two, I pick CVS. It's been a very steady performer. It's got a nicely growing earnings. They'll grow about 15% this year, about 15% next year. You know, very highly focused on the consumer. They've done a good job in the front of their store, much like Shoppers has done here in Canada over time in growing their profitability. You know, return on equity has gone from about 11% to about 15% over the last 2 years. And I think that it's likely to continue to perform quite well. So we like the retail sector. This is not going to be a rocket ship. It's going to be a steady performer. And this is the one that I'd buy. There's
CVS outperforming Walgreens. Here is a tweet. It's from @KellyMiller. Your guest talked about retail just then and earlier, and some more now. What are your thoughts on Loblaws and or Canadian Tire? Both have had strong runs of late.
Right. So we like retail. Retail is probably one of our biggest sector weights. We happen to have more U.S. retail exposure than we do Canadian retail exposure. But the retail sector in Canada is benefiting from the fact that, you know, Tim Hortons is on its way out. I think that with Tim Hortons, consumer was about 5% of the Canadian market. Without Tim Hortons, it's about 2% of the Canadian market. So money has been sprinkled across all of the various retailers in the Canadian marketplace, from Dollarama to Loblaws to Canadian Tire. I think that the best theme that you can focus on most consistently going forward is home improvement. I think Canadian Tire fits in there. We really like Home Depot in the States. But I think that this would be the one that I would choose in the very short run.
There's Canadian Tire against Loblaws. Tim Hortons the outlier with the takeout offer from Burger King, which is still pending. Let's take another break and come back after this.